So I'd like to introduce Mieke Van Dam, who is the Life Science Manager for the Australia-New Zealand region of Chubb Insurance. So we were meant to have Shane Thor on board, who also works in this area, I believe as a broker essentially, but he couldn't make it today, unfortunately. So it's just going to be Mieke and myself. And the topic is insurance, and I just want to preface that by saying that the reason I organised this webinar is that I believe there is a really strong intersection between medical device development and insurance, and that is around risk. So when you're developing a medical device, it's largely an exercise in managing risk. You're trying to do the job, but make sure that you don't harm any patients or the operators in any way. But inevitably, there are going to be some risks that you just have to take on board, and there's the traditional way of accepting those risks and dealing with them is through insurance. But beyond that, I don't know too much more. So I'm really interested to hear from Mieke. So with that, I'd like to ask Mieke to introduce herself and take us through the presentation. Thank you, Mieke.
Thanks, Tim. Yeah, hi everyone. Thanks so much for having me today, and thank you for your introduction, Tim. As Tim mentioned, I'm with Chubb Insurance, and I have worked with, well, to be honest, on and off with Chubb Insurance for over 10 years now. And Chubb Insurance is a global provider of insurance solutions, and they focus in a number of different areas, but my area of specialty is life science. So we look at anything from pharma companies to med device companies, people running clinical trials, and kind of anyone in between. But we also have a very strong technology practice. So we work very closely alongside them. And we've been in this space for over 25 years. So, and we really were the founder in this space. So we do have a lot of experience, in both life science companies and companies in that tech space as well.
So when you say technology, you're talking about software and electronics and anything like that?
Yes, exactly. So sometimes we'll get a risk which kind of sits on the fence, and we'll sit down with our technology underwriters and really try and work out where or which policy would respond best to their needs. But yes, we do have quite a lot of experience in both, and obviously given the way that med device is going at the moment, and integration with AI and just technology in general, we find that we're sitting down with our technology underwriters a lot more to discuss these sort of risks and exposures that they face.
Yeah, it's really interesting, because what I find interesting about this intersection between life sciences and technology is language. When you start talking artificial intelligence, if you try to get them in a room with somebody who's talking about developing a new vaccine with spike proteins or stem and cell therapy, surface chemistry of various things, it's like it's like speaking a foreign language. So and I'm really interested in understanding. I'm interested in also, we talked about this briefly just beforehand, but in order to assess the risk of something, you need to have some understanding of the technology, I would imagine. So having your technology people and your life science people, to try and cross that bridge and that language barrier is pretty important, I would say.
Yeah, no, again, completely agree. And like we obviously chatted earlier, Tim, but there are a lot of things that we do look at when we assess risk. So our first point of review is, what are they doing? What is this insured doing? What are they looking to do? What areas are they in? And what is the application of the product. So if it does have a medical application, we do look at it in life science. But if they're just providing a software and that doesn't as such have a medical application, then it probably will sit within our tech line. So anything in that med device space usually does come through to myself. And then from there, we kind of look at what's the revenue generated from this insured, what kind of customers or contracts do they have in place, and what areas are they operating in terms of location. So I'm sure everyone's aware that the US is a lot more litigious than Australia, but Australia is definitely moving in that direction. So it's something to be mindful of, particularly in New South Wales. So they're kind of the areas that we look at as a starting point, and then we'll do a deeper dive depending on the complexity of the risk itself.
I'm actually also thinking about a bit of a triangle here. So we talked about technology and essentially the biology, but the other side of it is, when you sort of medical is the regulatory, what are the chances, some regulatory rule being broken, I guess. So that's almost a field in its own right that's sort of unrelated to the biology.
Yeah, no, completely. And obviously there are different regulations for different territories, and some which are more stringent than others. So if we talk about the FDA or the TGA, or more so to the risk itself and what kind of device you're working on, will depend on the level of scrutiny and detail that we look at. So it's definitely interesting. It keeps us on our toes. And obviously it's ever changing. So we're constantly kind of having to update our guideline and the way we look at risk as well.
Okay, so we're going to be going through all this in detail. Let's get started.
Yes. All right, perfect. So what I really wanted to look at today is what insurance is required for developers of medical devices. Obviously, insurance, there's a range of different insurances that a company can have, but I was just going to really touch on the ones that I think are most important to someone who is developing a medical device or developing a software for a medical device, and then really touch on some claim cases and scenarios that either Chubb has seen globally or that have hit the insurance market, which is always quite interesting. So I think we come across this question a lot, particularly for our smaller clients. And if Shane was here, I'm sure he would attest to this, but the question that we get is, why do I need insurance? I feel that my service and my product is of high quality, and I don't really think that I need insurance, and I feel like I'm covered by the contracts that I have in place to cover my liability if something were to go wrong. So I would say,
what kind of contracts could they be? Because like companies are often limited liability,
sure,
and you can get directors insurance. So I imagine there's a number of people out there who just say, look, I've done all this work mitigating my risk during the course of the project, and we know exactly what all the scenarios are, and we've accounted for them with our labeling and instructions to use, and we have a watertight case basically. But you still get people who say, so I imagine you would get people who say, for that reason, I don't need it. So what's your counter to that?
Yeah, no, absolutely. And we come across that a lot. But I would say the majority of claims that we do see is in relation to a contractual dispute. There could be a bodily injury that has resulted, and then someone comes to it comes to a third party and says, well, this is actually your fault. You failed in your contractual obligations. And even if there isn't any merit to the claim and you've done everything correctly, there is still a cost to defend yourself, a legal cost to defend yourself, to get yourself out of that claim. So we see huge legal bills where insureds have to pay just to fight to get out of the claim. So if you didn't have insurance, you would have to obviously cover that cost on your own.
You're talking about the cost of defending. You've got the cost of defending.
Yes,
yeah.
the cost of defending.
So product liability covers that kind of thing as well.
Correct. Yeah, absolutely. So if you didn't have product liability, you would be up for those costs yourself. And again, depending on who you're contracting with, particularly if it's a company that has more bargaining power than yourself or has a lot bigger operation, you really are the smaller person in a transaction, and they would have deeper pockets and can really drag out legal proceedings for quite some time, which is obviously very costly. And if you don't have insurance behind you, I would say that, yeah, it's obviously very difficult, and you probably will not win because they can just drag it on and on for and basically bleed you out of money. So I would say it's an essential risk mitigation tool to have insurance, not only to defend yourself in a claim, but also just give you the peace of mind to conduct your business as you see fit, and kind of go for those bigger contracts as well, knowing that you're protected by an insurance company.
I would actually add one thing to that, because when you look at there's two elements in product development. One is the design and development process, and it may well be that you make an error in the design that creates a risk, creates harm for a patient that you really should have thought of, but you just didn't. And so there's that aspect. But then, even if you have a perfectly designed product, if you're manufacturing thousands or tens of thousands or millions of them, then you have to rely on a manufacturing process that is perfect. You manufacture the product perfectly every time. You have all the instructions and disclaimers. You have all the labels. You have all the safeguards and all of your testing to make sure that it's electrically isolated and whatever. If you do 1 million units, just by law of statistics, something will eventually go wrong, and you'll eventually ship a product that isn't safe. And ideally that would never ever happen, but I think the prudent person would assume that eventually, if you ship millions and millions of these things, eventually something could go wrong.
Yeah, absolutely, completely agreed with that. And look, there are massive claims out there. So as you said, the law of statistics, something will go wrong at some point. And again, it's good to have peace of mind that you are protected for that. The other reason we see is, and a big reason why companies buy insurance is it is in fact a contractual requirement, and we are seeing this more and more where companies just are unable to trade with bigger companies in particular unless they have the required insurance and the required limits behind them. So we often see requests for 20 mil products liability, and we're seeing more and more requests for higher limits on the E&O, which is errors and omissions, which I'll go through in my next slide. But that's the financial loss cover that we do offer, and is becoming more of a requirement in a standard contract. We also see insurance needed.
So just before you move on, before you move on from that, the contractual requirements, I'm just wondering about the transfer of risk. So yes, you've got a hierarchy. You've got the legal sponsor of the product, the company that's marketing and selling and has gone through the regulatory approval processes and they have their ISO 13405 quality management system in place, and they're marketing this product and the owner of the product. But quite often they will have a subcontracting, manufacturer of the product, and multiple. They may, for example, in these active devices we're talking about, have a PCB assembly company like CircuitWise, and who will manufacture that sub-assembly, and then they might have a separate company that does the final box build. Now, I know that CircuitWise in a number of scenarios, they do both box build and the PCB assembly, but they have product liability. So CircuitWise has product liability for the PCBs it manufactures, and in a small number of cases where it does box build, it actually takes on the risk and does certificates of conformance and release for sale of the actual final product, and they have product liability for that. So what is kind of the, if your subcontractors have already got product liability, so say for example in that scenario where your subcontractors already have product liability and contractually have agreed to, take on that risk, does that mean you can have a lesser degree of insurance or no insurance at all if you're the head company?
Yeah, good question. I would say it depends on what you are doing to the product. We see a lot of companies that still carry insurance, again, because they will get dragged into any claim, even if they can redirect that to the subcontractor. It is prudent for them also to have insurance. But I would say it really depends on what activities they are doing. Even if they're just storing the end device to then be distributed out, there have been claims where they haven't stored it correctly, and there's been, because of that storage, it's led to a defect in the product, which has then been resulted in a bodily injury to a patient or a user. So it really depends on the activity that they're doing, but I would recommend that that party always has insurance. Again, like we discussed earlier, even if it's just to fight the legal battle and defend themselves in a claim, and the cost of redirecting that to the subcontractor if it has been a defect in their product or service, that all obviously costs money.
Yeah, so if you're assessing the assurance, so for example, in that scenario, so you've got a head company, the product owner, you've got, say, 2 manufacturers, and the other area that is remembered is the distribution. So it's very common, particularly in Australia, to sign up a distributor in a country or a region or even globally. And, if you sign up with one of these big global companies, they will take on, like for example, Stryker or Johnson & Johnson or somebody like this. They obviously take on all of the liability for, putting the product in the market, maintaining, providing service contracts, providing training, help desks, all that kind of stuff, all of which may provide erroneous advice and make errors. But you're the company still supplying to that big global distributor. So when you do your assessment, and I get the point that what you're saying is just, well, everybody's got to have insurance. But when you do the assessment, and how much you're going to charge in your premiums for the device, and what the the caps are and so forth, do you take into account just how well structured or the transfer of risk is being set up by the head company?
Yeah, absolutely. So we would, in our rating process, we would rate an authorization or a license holder a lot differently to a distributor, with a distributor being a lot lower risk. In terms of how much lower, we would ask for the contracts in place between the license holder of that product and the distributor to make sure that those indemnities in that contract are strong, and that they have full recourse to direct any claim back to the sponsor if it is a result of a manufacturing defect. Obviously, if we're talking about wrongful advice, as you mentioned, then that would be a distributor issue. But we do rate those companies very differently.
Yeah, the designer is the other, like Genesis, Genesis and Segway. So designer is also liable as well. So it goes on and
Yes,
on, doesn't it?
it does. It really does. And we look at all companies kind of in the chain, and we think of them very differently. And we have different categories that we would slot them into depending on what part of the chain that they're on. If they're only doing R&D, that is a lot lower risk. If they're in the clinical trial phase and they only have a select number of patients that they're testing it on, again, that would be lower risk. But when we talk about commercialization, at what point are they in the chain? Are they just providing a component that then is used in a complete medical device, which kind of gets signed off by a bigger company? Again, that would be a different exposure. Or are they a distributor who has full recourse against the manufacturer and the designer of the product? So it is interesting, and we do treat every company very differently. And we ask a lot of questions, I would say probably more than other insurers, about the contracts in place, the liabilities in place, how do you manage your risk, just to try and get comfortable with what our insureds are doing.
Yeah, I imagine that quite often you'd only get part of the whole supply chain. You wouldn't necessarily insure everyone because they're already going to have their pre-existing insurance. But ideally you'd have watertight, all of these different insurances referencing each other, so there's no gaps or anything missing.
Yes, in an ideal world we would, but we often don't. And obviously there's an element of risk that we take on board, which is what insurance is. So we have to be comfortable with some level of risk, and depending on what that level is, we'll obviously have it depend on the premium, and sometimes the deductibles or the retentions that we ask our insureds to hold. So it's a balancing act, I would say. Yeah.
And I think at the end of the day, the product owner is the person who, because the audience, could be people from any one of these different categories. But at the end of the day, the product owner is where the buck stops, so to speak. If there's something wrong with a product in the field, all usually stems back to the company designing it and trying to identify all the possible scenarios and circumstances. So it's incumbent on them to identify those gaps, I guess. But anyway, that was a long discussion about contractual. I'll allow you. Let's move on.
Okay, not a problem. The other reason why why a company might buy insurance is if they're involved in any clinical trials. So, as you may be aware, there are legal requirements for clinical trial insurance. Depending on what state you're operating in Australia will depend on the limit that you require. So in New South Wales, it is a 20 mil clinical trials limit that you'll be required to cover. And when you submit a protocol for approval by an ethics committee, they'll ask for evidence that you have the appropriate insurance cover. And this is off the back of a number of claims in the past where companies didn't have the required level of insurance, and there was a large claim, and patients weren't adequately compensated as a result. So there has been, actually globally, but there's been set limits that companies must have to get their clinical trial over the line. I would say...
Is that the same for getting products? Is that the same for getting products released onto market, or is it only for clinical trials?
That's only for clinical trials. Yes. But again, the standard for products cover, I would say, for a commercialized product would be 10 to 20 mil. And this is really driven by, again, by contractual requirements that you would have with your customers. So I know that, for example, New South Wales Health would require a 20 mil products limit. and a lot of other businesses that I'm sure your participants would sell to would require those higher limits. But interesting with clinical trials, some insurance policies don't cover clinical trials. So I think if you're engaging in any way with a clinical trial, maybe you're providing a product to be tested within a clinical trial, I would check that you do in fact have cover, because there are some policies that would exclude that automatically. All right. Okay. So I'll just continue on. We've kind of touched on a few of these areas already, so I won't spend too much time, but there are a number of areas of insurance that I think are important for developers of medical devices. So the first is premises liability. So that's just our typical slip trip cover. If someone comes onto your office or your perhaps it's a lab or a workspace and they trip over, you want to know that you're covered if they in turn sue you for injuries that they've suffered. We talked about product liability. So this is cover for bodily injury, and that's key. It has to be a bodily injury that a third party might suffer from use of your device or as a result of your service. Again, I would say that this is the main cover that insureds would need, and it is the driver of the majority of our claims. I would say the second most important cover that I would recommend is the errors and omissions. So this is the financial injury. So if there had been a defect or deficiency in your product or service and a party suffers a financial injury as a result, they could bring a claim against you saying that they've lost X amount of money. And if you had your E&O insurance, that's the cover that would respond to that claim. Cyber risks is another very important.
Sorry, just before you leave that, so with product
Sure.
liability, if you had a fire and your product caused a fire and it burnt down the building, you might be liable for the cost of the building, but and that would be under product liability. But if that cause meant that the business couldn't operate for a month and they had a financial loss, then that would come under errors and omissions. Is that right?
If it was to a third party. So the area of insurance that I look after is liability insurance or casualty insurance. So that is when we look outwards and we look at it, the injury or loss suffered by a third party. There is a different insurance, which is property insurance, which is more first party related. So if your business suffered a loss or your building burnt down, that would be covered by your property insurance. But if your device caused a fire and it not only burnt your building down, but it burnt the building down next to you, or was used in a hospital and burnt the hospital down, or caused, well, that's a bit extreme, but caused damage to the hospital, that's when our policy would step in, because it's a third party claiming against you, which I actually go through this in a little bit more detail in my next slide. So there's two different sort of covers that or two different insurances that we're talking about here. Again, just going back, so cyber risks, I'm sure, again, most of you are aware that cyber is a very hot topic at the moment, and we've seen a massive uptick in ransomware claims. So this is something else your community should consider. And again, clinical trial coverage if you're in that space. So just taking a bit of a deeper dive into product liability. So as I mentioned, it's bodily injury to third parties. These could be clinical trial participants or third party property, including the third party's financial loss. The trigger that we use, which is how we kind of get into the cover, is the claims made. So there's two different triggers that we talk about. It can either be an occurrence or it can be claims made. So when we talk about claims made, the claim needs to be made within the policy period. If we talk about occurrence being a different trigger, it's that the injury or the event needs to happen within the policy period, but a claim can be made a number of years down the track. But most life science and med device companies would be on a claims made trigger. Again, if we talk about errors and omissions, so this is the financial loss that a third party could suffer, and it's not connected to bodily injury, it's just pure financial loss. Again, the cyber risk sometimes falls within E&O, but more and more we see this as a separate cover given the changing environment and the amount of claims we're seeing, and ultimately the amount of cover that insurers are asking for. We've really taken this out and put it on its own, just because we're seeing such movement in this area, and I really encourage everyone to consider cyber insurance because yeah, it's a very hot topic.
Yeah, and it's, look, given that, you know, this community is about, you know, products with electronics and software, and they're usually connected to the internet, you know, it's a hugely vulnerable area. And it is actually a subject I have in my list of topics that we are going to talk about in a future webinar about the various methods that you can use to address, you know, cyber risk. And I think it's an area where, you know, you can, you know, use for, you know, encrypt your communications and so forth and think, yep, no one's going to steal my data and no one's going to disrupt my device, and just believe it vulnerable that this device can be used as a method of getting into an organization. So nothing goes wrong with your device, but it causes damage, you know, again, a little bit along the lines of your financial damage, you know, allows hackers to get into an organization, you know, through this internet connected device. So it's, you know, there's all sorts of areas that no matter how skilled you are in a particular area, it's such a vast field now that it's very difficult to address all of them. And we see that with people like the FBI being hacked and so forth.
Yeah.
So,
yeah, it's crazy just the movement we're seeing in that area at the moment. And you're 100% correct. It could be the fact that your device connects to a hospital system, and the vulnerability within your device, which then hackers access to then get wider access to the hospital system, and release medical records, financial records, all that, the data that the hospital holds, which will then, and then the hospital will then hold your company liable because your company was where the vulnerability lied in the first place. So it is something that you need to protect yourself against. And again, I think ensuring that your contracts have, I would say, adequate measures to combat that risk as well.
This is really welcome news, because one of the things that I have observed about the active medtech industry is that most people become very conservative in the design of their products because of this issue. So they tend, like, for example, it would be fantastic for medical devices to be fully integrated to a patient management system in a hospital, because it just makes life easier, you know, for the staff. You know, it could be something as simple as weighing a patient, you know, if they have to be weighed, or take their temperature every couple of hours, and you do that using some sort of, you know, connected device, then you even something as simple as that, people tend to try and implement in a way that limits the possibilities of digital health and how connected you can be with that device. And they do it because they're aware of these risks and they know how hard it is to protect against them. So that's one part of it. The other part of it is just it's bureaucratic. an approvals process nightmare. So people, you know, particularly for a minimum viable product, tend to stick with something that's a little bit simpler, less connected. But because of this cyber issue, people are very conservative. But I'm imagining if you had a really good level of insurance around cyber risks, then that will make people a bit more adventurous in trying to have, you know, take that path down the digital health road.
Yeah, completely. And it just gives you that peace of mind that, yeah, that you do have that cover behind you. And as you said, can be more adventurous and more innovative to try, yeah, like you said, try new things. And yeah, so we are sorry.
What that really begs the question is, you know, we talked earlier about, you know, you guys having to be across biology, technology, and you know, regulatory, you know, risks. But you know, we're talking about technology. But you know, how do you guys assess whether a product, you know, has got this cyber risk management strategy in place properly? You know, how do you assess that in order to, so you're comfortable with the risk?
Yeah, look, we have a very big question set that we would ask to try and get a level of comfort around what our insureds are doing and how they're protecting themselves. We look at how the data is hosted, what data is being held, is it de-identified? So given what we're seeing in cyber, I'll be completely transparent in saying that it is very closely underwritten at the moment. So yeah, we do have a very large question set. Yeah, we really want to know.
What do you mean by closely? What do you mean by closely underwritten?
Yeah. So we just ask a lot of questions, really. And it's not so much that we're trying to catch our insureds out. It's more so, let's work with you. Obviously, we see a lot of insureds and we try and work with them to manage their risk. So if they say to us, oh, we're not doing this in a certain way, we will say, well, look, that's probably below the standard. We would encourage you to do X, Y, Z to reduce your cyber exposure. So it's really working with our insureds. We work with a company called BitSight that does an external vulnerability test, which we can share with our insureds. So basically that looks at any sort of endpoints that which could be accessed through the insured's website, or other things that they might have available on the internet, and kind of assesses how easy it is to hack. So that's a tool that we use in our underwriting, and the report that we get can be shared with our insureds. And it really is, it's a risk management prevention tool. So we want to help you protect your risk, because ultimately that helps us protect ours. And that's the view we take at Chubb. We work very closely with our clients, and hopefully it's better claims outcomes for both of us.
One of the things that always amuses me when you talk to various service providers like yourself in the medical device development process is when you ask how early, you know, at what point should you engage? Everyone always says as early as possible, and this is something I'm kind of thinking what you're saying here as well, you know, because quite often insurance is something which is left till right at the end. You're about to go to market and you say, well, we better get our insurance in place. But from what you're saying, it'd be actually really good to engage quite early on in the design process to assess your requirements in terms of your user requirements and your design input specifications around what you require in terms of cybersecurity. Go through that checklist early to make sure that you've got everything in place. So when you do get to the end and have to go through this sort of audit, so to speak, you've already covered everything.
Yeah, no, yeah, completely. And we can help you in advising what the standard is, or what the above average risk management protocols that we see. So yeah, it's interesting because we do find people leave insurance to the last minute, and we understand that. But as you said, it would be good to get engaged earlier, and we can help you guys along that process.
Yeah, I know that the CEO of Genesis, Jeff Sizer, is online. I don't know if he wants to take the mic. I'm going to allow you to talk, Jeff.
I'm here.
Are you there, Jeff? Yeah, Jeff, can you hear? Could I just ask you about this? Because I know you're obviously a lot more knowledgeable about the cyber side of things than I am. What do you think about this idea of getting this? Well, actually, the reason I wanted to prompt you online because Mieke just mentioned standards relating to cyber. Look, I know that we've got a whole heap of standards, but is there anything specific to cyber? And what is your response around the idea of doing an insurance audit earlier in the process?
Well, the
cybersecurity, it's not common, is it?
Indeed not, but it's an interesting thought. The cybersecurity area is very rapidly evolving, and there are guidelines and codes of practice coming out and being put forth for Internet of Things at the small end and big systems at the other end and everything in between. The standards making process, of course, lags the need. It takes years to get a regulatory standard in place. So therefore, we're left in a bit of an interim period of having to rely on guideline documents. And I'd say probably the very best source is the FDA in the US, who are extremely proactive and good at coming out with guideline documents. So in the absence of technical standards or regulatory standards that have been mandated by governments around the world, following what the FDA comes out with is probably your best bet. And there is activity in Australia and other jurisdictions. So that's a sort of a non-answer on the regulatory standard front. We will have to wait this space before there are ISO type standards available to us. In terms of the insurance audit, of course, the interests of the insurer and the interests of the insured are closely aligned, and so it's actually not a bad way of if you're uncertain about the cyber thing, of going down the insurance pathway and bringing expertise to bear that probably would be not available to you, because I'm sure that Chubb has a lot more expertise and thought on managing the risks around cybersecurity than the likes of you and I.
Yeah, thanks, Jeff. I'm going to put you back on mute now, but if you want to butt in at any stage, just put your hand up. Yeah, look, I think that that's an area, this idea of doing checklists early on in the process is probably not common in our industry, and I think it's definitely something worthwhile pursuing. How freely available is your checklist, Mieke? Do you have to sort of sign up to be a client before you get to see it, or do you guys, share it freely?
Yeah, no, we so I think we have a proposal form which is quite detailed, that kind of goes through everything that we would consider in the underwriting process, and I would use that as a base for a checklist. So we would go through how your data is hosted and the controls in place with that, other sort of security measures that you have in place. So I would really use that as a checklist, and I can share that with you, Tim. Even if you don't send us the proposal form to quote off, I think it's just good to have and good to use as a base. Just going back to what Jeff said, I would completely agree with using the FDA and their guidelines. Obviously the US is, things happen in the US usually before they happen in Australia. So they're at the forefront of this cyber issue. But just given the changing nature of cyber, it is moving extremely quickly. Yeah, I think touching base with us early is definitely worthwhile, because we brought out a new cyber strategy at the start of this year, and already they're talking about revising that, just given the change in ransomware attacks that we are seeing. So it is an area that's moving extremely quickly. and something that we do need to stay on top of.
Now, I'm just going to ask somebody else. There's a gentleman, Pierre Longchamp, who's made a couple of comments in the chat. And Pierre, you don't have to, but I'm going to allow you to talk. If you wanted to take the mic and just explain your question, or you wanted to comment on what Jeff said and something about Apache and Linux, can you explain that?
Thank you. Yes. Yeah. I have the impression, through many discussions within this realm of medical device regulation, which is my job. I mean, I've worked in this field for 15 years, that a lot of people who are not from the software world, like regulators or coming from the biological or this sort of thing, they put all open source software in the world of everything is open, there's no confidentiality, there's no security. And there's this big misunderstanding that even through 62304 with the concept of SOUP, that open software are not safe, but that's the other way around. I mean, we all know that 99.99% of the web server in the world are on Linux because it's safer. And I find it some paradoxical that this community doesn't adopt this sort of open standards faster to address this issue of cybersecurity. Do you have any comment on that?
Yeah. I personally don't, but
Yeah, I can comment on that, Tim.
And Jeff? Yeah, sure.
Have you unmuted me? Can you hear me?
Yes, I can hear you. Yep.
Good. Yeah, just to comment broadly that it is paradoxical, and it's interesting to note that many of the large financial institutions around the world and banks and so forth use open source software, and on the basis that it does get a lot of scrutiny, so that if there are flaws and backdoors and so forth, it's liable to be spotted. But there was one classic case just a couple of years ago of a major flaw, I think it was in an encryption algorithm, that no one had spotted in an update, that left things wide open and vulnerable. So it is a bit of a double-edged sword. The way that, and dealing with the SOUP, software of unknown provenance issue, the way that I tend to approach that in designs we do is divide the architecture up into various sections of the software, some of which, for example, the embedded microcontroller stuff we typically deal with is very tightly buttoned down in-house 6304 process software. But then when we come to a web interface, for example, or hosting a website, serving stuff to the web, web-based communications, and even Ethernet network type communications with hospital systems, you then get yourself into the domain of third-party software devices and stuff, and you really can't practically avoid it. You can't do your own development of all of these internet-facing software modules on your own bat, but you can contain the risk. For example, you rely upon the software of unknown provenance and the third-party or open source modules, perhaps as a class 1 or class A software that conveys data from A to B, and you make sure that your security and privacy and all of those other data integrity considerations are handled by the end-to-end protocol, which is software you write under your 6304 process. So there's no real answer to the problem. And my personal opinion on this PC-based and Linux-based platform and web-based software and 6304 is there are an awful lot of heads around the world stuck in the sand, hoping the problem goes away and kicking the can down the road. But it's going to rear its ugly head sooner or later.
Yeah, Pierre, have you got any comments on that?
Yeah, I think I agree completely for the UI and networking and all that. But I mean, even for embedded development, in the spirit of taking a SOUP and making it your code in a sense, what matters is not that much that you have written the code yourself, but that you have tested it against any wrongdoings that you can analyze through your own risk management process. And even not microcontroller, but embedded Linux, for instance, is something that works. And there's no reason not to use it compared with, for instance, Windows Embedded.
Yeah, look, this is really interesting, and I might thank you guys. What I'm going to do is immediately after this webinar, schedule a cybersecurity for medical devices webinar, and I might even invite Mieke back to bring her checklist along, and maybe we can have a, if possible, have an open discussion. But I'm just going to ask Pierre and Jeff to mute themselves, and we better get on with the rest of this webinar because I notice we've only got 7 minutes left, and love to. But thank you very much, Pierre and Jeff, for contributing on that.
Can I just jump in really quick, Tim, and can I just jump in really quick and just address another one of Pierre's questions on the chat? So he mentioned using a NDA, and that is something that we do. If we need to have, like I said, a deeper dive on a insured, we have standard NDAs we would get signed and either set up a call with the insured and really ask about their risk management processes and go through it in a lot of detail. So yeah, it just depends on the size of the insured and whether that is warranted, but that's something that we are definitely open to.
Yeah, and on the chat there, people, there's a couple of standards that have been mentioned. Thanks there, Matt. Matt's a Genesis employee, so thanks for sharing all those, and Pierre as well. I'm not familiar with those standards myself, but we'll, yeah, we can talk about that in the next webinar on this topic, which I'll organise as soon as I can. Okay, so Mieke, would you like to? I've been very good at interrupting you today, yeah. But please continue.
No, I really welcome the interruptions and the questions. So just kind of going back to more of a life science approach rather than cyber. So there's other parts of insurance that might be helpful, and I'll kind of whiz through them. So there is a cover called medical monitoring expenses. So if someone suffers an injury, you might want to monitor other patients, whether that's in a clinical trial or other patients that have used the medical device. So there's a cover there that can be accessed. We have product withdrawal expense or recall. Again, something that might be beneficial depending on what you're designing or selling. Crisis response expense is a handy little cover if there is a big issue. This is more PR costs and trying to protect your brand. So if your company is a little bit bigger, I would recommend that this is something to consider. Again, we've touched on cyber. And a fantastic little cover, which I'm surprised it doesn't get tapped into enough, is amounts not paid for your product or service. So the way someone described this to me years ago was life science companies and their contractors, they have like a marriage. So if they constantly want to work with each other, even if there's a disagreement, they don't want to part ways. So instead of making a full-blown claim, which would inevitably result in a counterclaim, you can tap into this type of insurance and claim any sort of invoices that haven't been paid for work that's been completed. So again, another handy cover to be mindful of.
So I should ask that. Does that mean say, for example, a product designer like Genesis could have this insurance, and if one of its clients didn't pay, that would cover? Would it actually cover that kind of thing?
Yes. Correct. Yeah, yes.
There you go.
So if
I might talk to you after this.
Yeah. Yeah. So for example, if Genesis provided something and then the third party alleged a defect, you could claim that invoice for that work completed, because the way we see it is that if you were to push that issue, more times than not, that third party would make a counterclaim, which would often be bigger. So it's and really disrupt that relationship that you have. So sometimes it's better just to claim this and get that paid straight away, and then you can continue on. and we would encourage make tweaks to whatever that issue was in the past, but could carry on with that relationship and that work.
Yeah, that is really interesting. Yeah.
Does that make sense? Yeah.
Yes, it's very useful. I'll make a comment on the product withdrawal as well, is that one of the things in medical devices is you have very good traceability. So if you can do your traceability down to the component level, and this is something that CircuitWise did because they were involved with the ventilators, and most people do traceability at a batch level. So if you have to do a product recall, you have to recall all of the products, that might have been in that batch, so it could be a very large number. But if you actually do it down to the component level, so a batch might have, say, for example, 4 or 5 different reels of a microprocessor. And if you found that one particular reel of microprocessors had a flaw in it for some reason, you could actually identify the individual serial numbers of products deployed in the field. And that would greatly reduce the cost of the product withdrawal. So I'm hoping that if you did use a company that had really good traceability in place, that the product withdrawal premiums and would be less.
Yes, I would completely agree with that, Tim.
Yeah. Right.
Okay. So I don't know, Tim. I'm not sure how we're going for time, but
let's keep going. Let's get on to the case studies.
Okay, not a problem. So like I said earlier in the presentation or the session, these claims are kind of real life examples that we've either seen at Chubb or have hit the wider insurance industry. And they can really be manipulated or broadly applied to kind of different people, again, along the chain. So this might be the end product holder that has been making these larger style of claims, but we do see that that product holder will then draw in contractors or subcontractors that they've used in producing their product to kind of basically share the liability with them or try and push the claim back onto them as well. So the first claim example is a medical device used through a clinical trial. So in this scenario, a specific device was used in an artery, which then caused issues with the patient's femoral artery. And there is allegations that the product failed and was defective, and the patient's artery had to be surgically repaired. Again, this was in a clinical trial. So if you didn't have clinical trial insurance, which, to be honest, it is mandatory to get the clinical trial over the line, so you would have, but that's the type of insurance that would respond to this scenario. So clinical trial liability in Australia is a no-fault compensation system. So basically that means that there's no fault on the patient. Even if they didn't follow the rules correctly, they would still be compensated for the injury suffered. The only thing that they need to, or the only threshold that they need to meet is that there was an injury and this was suffered as a result of the clinical trial. So it's a pretty low threshold, and hence why this claim was paid. This is another claim example that we've seen. So a medical device company manufactures hearing aids. A patient's ear infection led to a brain aneurysm because of the stem of the hearing aid. The patient underwent multiple ear and brain surgeries, but resulted in a complete loss of hearing and a loss of memory. So in this scenario, the insurance covers that could respond, and again, this is subject to the full terms of the policy, but the patient injury, the cost of medical treatment, the loss of income suffered by the patient, and general pain and suffering would fall under product liability. Errors and omissions, so this is the financial loss. So other customers could sue the insured because they are unable to sell the hearing aid due to an injury to another party. So this would really be claims from distributors that they're really stuck now with this product that they just can't sell. The crisis response expense, so this is that publication broadcast. Obviously, it's quite a severe claim, so I'm sure there would be media attention on that. And the product recall. So the manufacturer would want to remove the defective product and potentially destroy it. So then there we can see all the different insurance covers that would come into play for basically a patient injury claim. And this, obviously we're using a specific example, but this could happen to any sort of bodily injury claim from a med device that we could see. Another claim that that could occur is so a software glitch invalidates clinical trial data. The cost to rerun a clinical trial is, as you can imagine, huge. So this would be very costly. So the scenario here was a contract research organisation was contracted to provide clinical trial services in Europe. An error in the CRO's software program failed to randomise patients in the trial. As a result, the trial data was deemed useless, and the trial was needed to be rerun. So here we don't see any bodily injury, but there is a pure financial loss. And again, the errors and omissions cover would kick in to respond to a claim of this style. My last example relates to, again, we're kind of touching on cyber here, but a flaw in a networking software with a major hospital allowed a hacker to get access to patient medical records. And among those records, this is a made-up scenario, but there was TV stars records, and they were exposed on the internet. So here we see personal injury. So it's just important to note that bodily injury doesn't need to be physical. It could be could include humiliation, reputational damage, or mental anguish. Again, errors and omissions we would see here. So a hospital sues for economic caused by the corruption of their data, and privacy remediation expense. I didn't actually touch on this, but this is the cost of notifying other parties of the breach. As you can appreciate, there'd be thousands of records within a hospital system, and you would need to notify every party that there has been a breach of their records. So this is something, again, a cyber policy would respond to, but our life science policy would also respond to that scenario as well. So that's all I had from me. Tim, did you have any questions or comments that you wanted to wrap up with?
Yeah, no, look, that's been really great, and it was exactly what I wanted to, bring to the community. I guess the only question really is, as I opened the presentation, I mentioned that, it's an exercise in risk, and we try to design products that minimize as low as practically possible, the potential for harm to patients or operators or any other users. To what extent do you, as an insurance company, try to assess and understand how good a job, the designers, the product owner, the distributors, the clinical trials, all these people involved, to what extent do you really go in, sit down and assess, just how good a job they have done? And does that in any way, shape, affect the level, of the premiums you'd have to pay, or the excess that you'd have to pay in the event of a claim?
Yeah, no, yeah, completely. So yeah, we value obviously high quality work. Yeah, absolutely. So to be honest, if the work, if we didn't feel the work was of a high quality at all, we probably wouldn't insure them to start with. But if we had some sort of doubts about certain aspects of their business, or that we felt they weren't up to the level of, or wasn't of a high standard, that would, most definitely affect the premium. Again, depending on where they are within the process, would depend on the level of comfort we would have, or depend on the questions and the standards that we would hold them to. But yeah, absolutely, it would most definitely affect premium, would most definitely affect deductibles. So that would be the level.
Do you have, like you mentioned, you got a checklist of questions you ask around cybersecurity. Like, do you have a similar checklist of questions around medical device design? Like, for example, checkbox number 1, do you have ISO 13485 quality certification? Because some medical device, people designing medical devices don't.
Yes.
So how much value do you place on that, and does that change the premium?
Yes, yeah, no, it definitely does. And we have again a question set, similar to our cyber question set, but it's a life science proposal form that we have. It is 27 pages long, but has different sections for different types of insureds depending on what they do. And we would most definitely ask, are you ISO compliant, or what standards do you adhere to? Do you, again, depending on what they do you adhere to or GMP manufacturing practices? Are you compliant with all TGA regulations? Do you have any 483s with the FDA? So we go into a lot of detail. We often ask for copies of contracts that our insureds have with either suppliers or people that they contract with, to again review the indemnity provisions in those contracts. But we do have a question set which is a starting point, I would say, and depending on the answers to those questions would depend on where we go from there, and the additional questions that we ask. But going back to your original point, it does very much so affect the premium and the retention levels that we're comfortable with.
Yeah, I'd be interested in, maybe pursuing that at another time. Just go on to the next slide, by the way, so you get your email address up on their screen. So for those of you, most people are still here.
Sorry, I've gone a bit too far.
Yeah, there should be one with your email address. So I'd welcome people to, we've got a black screen at the moment.
We do, yeah, sorry, it's a bit of a lag here. I'll keep trying.
Is that one of the reasons we started this community is that, you're broadly dealing in the life sciences space, and I would have to say that, we'd be skeptical as to how well aligned that set of questions would be to active medical devices very specifically, because at Genesis, you heard from Jeff and Pierre. I'm not sure of his background, but people who are actively designing these devices, they know what can go wrong, and we started this community because we felt that some of the the other communities in the life sciences space in New South Wales were not really addressing the detail of what we were dealing with. And so I'd be interested to see how generic those questions are. And I'm conscious that Chubb is a global company, so you've probably got some very good global resources behind that. But that's probably a question for another day, because I kind of think we've run out of time. But
I can share that with you, Tim, that proposal form or question set that we have. And like you said, in life science, we look at a range of different companies. So it it's quite segmented, but I can definitely share that
Yeah.
with you to share with your members. And again, even if you don't approach us for insurance, it's a good kind of a checklist to.
No, well, do send that through to me. But the process we have here is I don't distribute things generally.
Okay.
There's the email address on the screen, people. If people do want to get in contact with Mieke, you can do so with that email address there.